trade. Let's get in Salil Kapoor now to speak about the numbers and the outlook ahead. Salil, good having you. Thanks so much for joining in. So, Salil, 2 or 3 things. Firstly, I saw your ARPUs, and I think you restated some ARPUs because of consolidation. They were expected to be 179, 180, and I think like to like, they're probably still at those levels. Can you confirm that for us?
So the current ARPU is 180 versus 179 last quarter, and the restated is 173 versus 172 last quarter.
Okay.
So the ARPU, both ways the ARPU is up by about 1 rupee.
Okay. And just before we get into the details of the quarter, Salil, I just wanted to get that point out of the way because there's a lot of confusion because of the numbers and the restating there. Assuming that 173 and 172 that you reported this quarter will be the new norm, do you believe the quarters ahead will show a steady state ARPU, or can the ARPUs actually go up as well?
ARPU are, if you look at our record on quarter-to-quarter basis, the ARPU has been going up. First quarter is usually always slightly on the lower side. Still, we have managed to increase the ARPU by a rupee, and we maintain our guidance that throughout the year, on an annual basis, the ARPU will go up by about 6 to 7%.
Okay, fair enough. We were having a conversation with Mr. Goyal last quarter around, and he was saying that, doing 100 crores in FY16, profit is a fairly conservative number to go by with. You'll be able to surpass that quite comfortably. Is that the guidance that you would still share out with investors, given the fact that this quarter has been another promising quarter?
Yes, of course. We maintain that guidance. This quarter has been promising, as you said. The profit in this quarter is about 54 crores. On a like-to-like basis, last quarter the profit was about 35 crores. And if you go on to a year-on-year basis, same quarter last fiscal, there was a loss of 15 crores. So we've been moving northwards, and 54 crores from 35 crores last quarter is a substantial improvement and a jump, I would say.
But the point is that if you've done 54 crores, and if I, minus out the seasonality element of the business, if there is one, and, extrapolate these numbers, then you would perhaps end the year with northwards of, I don't want to put numbers out there, but anywhere between 150 to 200 crores in profits.
So I would not comment on your maths or comment on the numbers that you put there, but I can just say that things are very promising, and they look very promising.
But is this a decent, a number to go by with to signal what the rest of the year would look like on a quarterly basis? Like, do you think that 54 crores could easily be the run rate for the next 3 quarters? 55 crores?
Sure, it should not come down. It should not come down. The revenue is going up, and the costs are well under control, so we should see improvement going forward. Further improvement. If you look at the overall revenue, it's about 762 crores this quarter, and it's up by about 2 to 3% on quarter-to-quarter basis, while 20% up on year-on-year same quarter last fiscal. So there is certainly improvement on this. We've implemented differential pricing, and we're extending differential pricing to next lot of cities. Then high definition numbers are definitely increasing, and there is a growing concept of high definition as far as the panels are concerned on the TV side. The hardware is concerned on the TV side. So we are getting more and more subscribers on the high definition platform, and the ARPU for high definition is much better. The revenue is much better. So all things look positive.
Okay, I'll just make up those numbers from the run rate that you're giving me, Salil, and that seems to be very promising as well. Now, one factor that stood out, Salil, for me this quarter, I was just looking at your P&L, and that your selling and distribution expenses, and correct me if I'm wrong, they've actually dipped a bit despite your growth in subscriber and other revenues as well. My question is, that has probably led in a significant way to the EBITDA margin expansion on a YOY basis. How much further juice is left there? Because you're at 33%, which, while slightly below estimates, is probably the highest EBITDA margin in the last few quarters. What's the estimate on the quarters going ahead?
So we would not like to further reduce the sales and distribution cost. There has been reduction, yes. There has also been reduction and consolidation in the marketing and promotional expenses, because we feel that now the brand is sustaining it on its own. So there are various expenses which have been controlled. On the distribution side, the expenses have been reduced because last quarter you must have seen the increase above normal, and that was because of World Cup and a lot of other schemes were given, and a lot of material which is sent into the market and billed to the distributors. So you have a lot of schemes riding on that. So that is why it went up. It's come down back to the normal level, and it's sustainable at this level. We might not want to reduce it further down because that would affect the distribution in the long run. But yes, with the current numbers are good enough as far as the sales and distribution margin is concerned. The cost on the content is also well under control. So EBITDA will continue to be healthy, and if you see the EBITDA margin this time is 32%, which is very good as compared to 29%, which was also good last quarter. So going forward also the EBITDA margin is going to be good because the top line is also going to increase substantially. Dash 3, Dash 4 digitization phases are ahead of us. So a lot of subscriber acquisition. We maintained our market share of 27%, which is the largest as far as all the DTH players are concerned in this quarter as well. Zing is helping us. Our strategy of highest channels on the high definition is helping us. So various things are working fine as far as the market is concerned, and since the subscriber acquisition will happen in a large number, the overall revenues will go up. EBITDA will definitely come up as a nice number again. So I am leaving the maths to you now.
Yeah, no. But while I'll do that math, and by the way, HDFC AGM will start, so we'll cut to it any moment. But Salil, while we'll do that math, you surely have an internal subscriber addition number in mind for this year at large. What is that number?
So overall, we have been giving the guidance that we'll add overall subscribers in the range of 1.4 to 1.7 million, and that's what we are maintaining.
Okay,
right. I think in a bit we'll have to go across to the HDFC management, Deepak Parekh. We can see him there. Those were also a decent set of numbers. You had another one for Mr. Kapoor?
Salil, just one last thing. So while you set up Comnet, previous alliances of this nature haven't really worked. Sure enough, you both are from the same group, so to say, so it's probably an advantage. But what kind of advantages would come in because of this JV with City Cable?
When two buyers who have substantial base as far as the subscriber base is concerned come together and then they talk from the same table to the broadcasters, there is higher,
Salil,
much better negotiating power.
Salil, let me come in because we'll have to go to HDFC as well. I understand the logic where this is coming from. My question is, in numbers or in some estimates, what kind of advantages come to you because of Comnet?
Can't put it in numbers. I'll have to give this answer in a qualitative manner only. When two large bases will come together and will negotiate, the prices are, will be controlled, if not reduced. So that's going to benefit both the parties. So that's why this kind of alliance should stay.
So, right, Mr. Kapoor, so as we wrap up, and I think my key takeaway from the interview is essentially what you're pretty much giving out as an outline for your profitability this year, which is that 50-55 crores on a quarterly basis, bottom line performance is very much feasible, on track. Okay, great. I wish you all the best. Good set of numbers, Mr. Kapoor. And all
Thank
the
you
best
so much.
for the future. That's a simple math then. If that's the run rate he's saying would be the order of the day for every quarter.
That's an astounding guidance, if indeed that turns out to be true. So I think we'll probably wait for the second quarter and figure out if they do another 50 crores and then they guide to another 100 for the next two. It seems a tall order, frankly, if you ask me.
That's true.
But
because I remember last quarter around, because it was the first quarter where they turned around in profitability, and they were talking about 100 crores being the base. So I think from there, this quarter's performance would perhaps revise the outlook quite considerably. Of course, Neeraj has a point to make just for the benefit of our viewers. Let's see whether this performance is matched by Q2 as well.
Yeah, that's actually the key. Okay, we just wait for HDFC to come by. Just take a couple of other updates as well on our experts, from our experts as well. Just take a couple of other updates. Sandeep Wangle, a really good call on HDFC.